30 seconds right here. We're still early, 9:59. Just about to start. I hear my tummy growling. It's because I'm fasting. There we go. Just about to. There we go. Okay, good morning, guys. How we doing? Let me pull up the chat. There we go. Roller coaster month, indeed. Um, we're going to take a look at the markets in a few different ways here. I mean, quite a bit of a bounce, right? And it almost seems like, the indicators like we use, it doesn't really signal until a little bit later. All right, if I go in here and I'll make it bigger. If I go in here, I put SPY plus QQQ plus DIA plus IWM. You press enter, and you don't really get like a signal until like this day right here, which was basically 8:19, right? So that basically means from a swing trading perspective, now, again, we kind of have to use the system to better understand how the logic of these grandmasters are thinking about trading, right? When does a long signal kick in for them? So if we look at the first long signal right here, it's 8:19, which is basically you didn't get a signal until like basically Monday, right? We didn't get a long signal until Monday. So the rest of the day, like how do you capture this signal down here, a reversal signal, which is basically what I talked about last week a little bit, and also in the FinBiz Club platform, which I'm going to close down the school platform and focus on the Telegram because I think that's a lot more efficient, or optimal for basically what the technology offers. So then the question is like, how do you capitalize on the red, right? And so I realized like there is a way, but it's not like, this is a swing trading indicator system, you could say. So it's gonna, give me the signal when it's a good environment to swing trade, but reversals, it's just it doesn't capture that, right? It's not a reversal system. So then now I was thinking like, all right, well, how do I optimize and develop a reversal system? And one way to do it would be to use something like basically a channel analysis like this right here, right? Where this channel analysis would have done really well if you just drew like a channel trend line right here. So as you see right here, I'll make it a little bit better. This is the S&P 500, by the way. I'll make it thicker and I'll make it purple. Should we do purple? Yeah, let's do, what color should we do? Something that's easier on the eyes because I have too many annotations on the screen. I apologize for that. But that's the whole point of practicing, right? There's no magical pill in all this. We got to practice. But basically, the concept is you could have capitalized on it, on a bounce, on a reversal bounce, basically by drawing a trend line like this, right? And as long as 2 points make a trend line, you got this point. You probably wouldn't have this day, but you probably would have got this day. But then that's still kind of scary because that's a big red candle day. I would have been like, oh, next day looks kind of scary. But then the next day actually keeps moving up. So what I could have done better was probably slap a trend line on like this and put a rule that as long as this trend line is respected, right? I didn't anticipate it to be a V bottom. I actually thought it was going to be like a H reversal or a dead cat bounce, but we didn't dead cat bounce. We just kept going. And then this this trend liner here, the channel trend liner here, it actually didn't break until Thursday. So that would have been one way to potentially play a reversal, right? So there's different techniques for different environments, and I think I could have played this one a lot better because now it's like the swing system are starting to show like, hey, potentially swing long here, and things are starting to look bullish again. Now, I hate that too, right? I can't control that, but it is the direction of the markets, right? And I need to respect the systems out there, and just basically focus on objectively what I see and manage risk, right? That's the main thing right there. So again, there is a way to play this, but that's up to you guys. Like how do you approach it, right? I think the trend line is really effective in order to fine tune essentially the reversal, right? Because this was a really nice V bottom reversal. So other ways that could have been done better, slap a measurement on it which basically at 10%, right? So we know that when the markets pull back 10% or 20% or 30%, any of these whole percentage pullback numbers, I think there's a tendency for the markets to want to bounce. The only thing, again, what we didn't anticipate well, or at least I didn't, is how big of a bounce it was. And now that we've almost retraced 100%, what does this essentially mean, right? Because I mean, if you think about it, like, in terms of bounce, like you could have like, I guess like you could have like no bounce like this. Basically, you have like two candles, right? Two candles next to each other, or you have a bounce that's kind of like what we have right now, which is like a V bottom, right? That's what we got. We got a V bounce. I was actually anticipating something like this, like a dead cat bounce, but that didn't necessarily happen. Then sometimes you have a bounce where it just goes like this and then it goes lower, right? So again, there's like different shapes to it, right? I didn't anticipate, I guess you could say number two right here, right? This is like number one. So it goes from like number one, two, three, four, from most bullish to most bearish. So technically, a V bottom is more bullish than like an H or upside down U or a upside down cup and handle type of sell down. We had a minus 10% and a ABC distribution wave, if that makes sense, from the Elliott wave analysis, right? A little bit more of an advanced analysis, but yeah, that I was actually expecting number three. Number three never happened, right? Because we never got this confirmation of like a break of a failure to bounce. We actually bounced quite a bit, and we got a V bottom bounce. So now that we have 100%, almost 100% retracement V bottom bounce, you could say, does that mean it's bullish or bearish, right? Um, I mean, it's getting a little scary here because we are in the negative seasonality months, and we did correct, right? But again, you can't assume that the seasonality, the quantitative backtest is always going to be right. It's really just a baseline, right? It's a baseline framework or model where you could apply it to the markets where it has a tendency to do this, but what you should be really focusing on is just the core markets, right? If it doesn't behave a certain way according to your baseline, then it probably is going to behave the other way, I realize. So that's just something that I've been thinking a lot about in terms of like how could I better improve to potentially capture this trade. But that's okay. I mean, I think I'm better on the swing side, and I'm working on the reversal systems, right? So that's a little bit of we start off in the first 5 minutes, 7 minutes here, talking about a potential reversal system that one could develop. But I think along the way we'll learn about other reversal systems. But I think I personally I kind of like that one quite a bit. Now, again, now from the reversal system going into the trend following system, well, it's starting to, I guess you could say, look pretty good, right? Because if we do an analysis of, let's do the FANGs. So let's do Meta plus Microsoft plus AMD. Oh, no, 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 no AMD. NVIDIA plus Tesla plus Google plus Apple plus Amazon, right? Press enter. That's seven, right? One, two, three, four, five, six, seven. That's the magnificent seven right there. Well, we actually got some long signals right here, right? Now, it's going to be hard, right? At these levels. But again, if you put risk management first, we should be okay because if we're wrong, we take a little cut and we just continue the journey, right? That's really the goal. The goal is just to be taking really tiny small losses in attempts to trade like the really, big reversals, big breakouts, big, channel moves, big trends, big momentum, whatever you're targeting in terms of your trading. I think that's probably the way to go, right? So minimize losses, admit defeat, and then just go on to the next one. It's kind of like the school platform, right? I tried out for 2 months. I got 100 members on there, but the platform did not prove itself in terms of my criteria, which is like, releasing another channel of like momentum. It didn't add any value in that, I felt. Maybe like a little tiny bit, like 2%, 3%, but it was just like, okay, I don't know, it didn't follow my expectation. So I'm going to cut my losses. But yeah, that's how I think we should approach it, right? Risk management first, and then everything else should be okay. Anyways, guys, good morning. How you guys doing? That's already 9 minutes in when We talk about, reversal systems, swing trading systems, what's going on with the S&P 500, how to optimize on the potential reversal. Then we talked about the FANGs or the Magnificent Seven and what the indicator is saying, and it's potentially a long on the FANGs or Magnificent Seven indicator. Quite a bit already, right? In just the first 10 minutes. It's a lot to kind of comprehend. But if you guys have any stocks, we could dive right into it. If not, then the question is, would you guys like to see the usual top-down analysis or jump right into stocks? I'm actually in the mood for stocks, but if you want the top-down analysis, I think, either or is important, right? Because it's like the question of like, do we want to start off with macro to micro or micro to macro? And they're both good. Well, I guess I'm in the mood for micro to the macro. V says either way is good for him. Okay, either way works. So jumping into it, yeah, I'm more on the micro today, right? So let's do that. Um, because I mean, looking around, right? Like again, I'm actually going to start adding this analysis moving forward in my weekly market monitor, which is basically what is the 8K indicator, the $8,000 indicator right here, saying about the fangs or the indices. Is it long or swing long or swing short or was it red light or green light, right? So I think I'm going to start implementing that moving forward. I think it's going to be something nice. We are still in the negative seasonality months. Now, we are about to close this month next week. And by the way, next week we won't be meeting. I'll actually be traveling out of the country. So going on a little bit of a vacation with the family. So no meeting next week and no report next week as well. It's a Labor Day national holiday. So just a heads up, okay, guys? No meeting next week. I repeat, no meeting next week. And I'll also announce it on the Patreon and the Telegram as well. But the following week after that, we will meet. But because of that, next week, Saturday, the 31st, is the end of the month, and we're going to basically print a new candle. So the question is, all right, if we're going to try and forecast what's going to go on for the next week, let's go into the S&P 500 monthly right here. So we are doing a little bit of a top-down analysis right here, just because I think it kind of makes sense, right? Because we're coming up on a close of a candle, and basically this candle is it's one of the biggest candles ever recently, right? We dipped hard, but we basically corrected. So on the daily, we felt the pain. We felt the pain of like a 10% pullback. On the weekly, you saw like a little blip right below the 20-day moving average, but technically it's still held. And then on the monthly, well, the monthly is not really showing any pain. The monthly is actually showing we're still going up. So it's almost like this V bottom. Again, the different the different bottomings, right? You got the double candle, like, hey, what happened? That was just a blip. Then you got the number two V bottom. Then number three is like the dead cat bounce or the H, the H decline. That's bearish. And then the really bearish is like not even like, well, actually, there's actually one more. The other one would be like you don't even get a chance to consolidate or anything. There's like no buyers whatsoever, so it just declines, right? So that's the fifth one, which would be the most bearish, you could say. But of course, like this actually leads to a bounce somewhere along the way, right? So what we got is what we got is number two right here, which is technically still bullish. At least look at the monthly right here, right? The monthly technically, we got too many drawings in here. Let me see, how do I do this? How can I draw without removing, okay, I press draw right here. I think that's what it is. We go to ideas. Give me 1 second. I'm trying to draw on it. If not, then I'll just, there we go. We'll click on draw and the cloud icon should be off and that'll let me draw. Yes, there we go. Perfect. So there we go. What we have right here, technically, it's still respecting this trend line. If we, were to slap a trend line on this, right? Technically, on the monthly scale, nothing happened, right? Crazy, right? Crazy to say, like on the monthly scale, nothing happened, right? We're still moving up right there. So essentially, it looks something like this. I mean, essentially that's a rising wedge, right? And we could consult Bukowski and see what he thinks about the rising wedge. Of course, like if it breaks this, then yeah, we'll start to we'll get the next confirmation of like potential price movement, right? Which we kind of did. If you look at that little tiny that wick right there, right? That the shadow right here. So it did kind of happen, but yeah. Yes, but the monthly shows a reversal candle hammer. Yeah, we can look into the hammer as well. And well, I mean, well, again, it's not official just yet, right? But I guess one could, with a week left in the markets, you could potentially guesstimate like where things are going to go next. Um, I think is it Bernard or is it Carey? I think that is Bernard because it's Carey Gutnick. Um, Either way, if you have time, I'd be interested in your view on TT, especially for any large investors who own it. Yeah, 100%. I actually would like to dive into that, into specific stocks and start, opening up under the hood, see what large investors own it, because I think, again, I'm in the journey of, okay, if it's anything in this journey of like trading and investing, you're going to go on periods of like sprints and periods of like consolidation, right? It's just like stocks. And ideally for me, I want to keep progressing. And so I feel like I got to a point where I'm starting to sprint again in my learning, where it's just like, you do this for like so long that it gets a little, I wouldn't say dry, but you mentally get a little sluggish. But now it's like I don't know, I feel re-energized or something. I do want to expand my knowledge. So I want you guys to start asking more good questions, and that'll tell me like, you're learning, but also like it also produces really good conversations, right? Anyways, yes, so we will look into that, and let's look at a candle pattern, right? So let's go to his index. So this is Bukowski's website, and we'll go into the candle pick index. This is not the what do you call it? The pattern one. There's patterns and then there's candlesticks, right? This one's a little bit more this one's a little more, actually a lot more advanced. So we look up the hammer, right? And basically, this is what V's talking about. Now, the hammer, right? Well, let's see. Let's do this one. Uh, Again, this is not my super area of strength, but this is a hammer that's occurring at the top. It's not at the bottom. And I think based off this image right here, it has to occur at, a swing low or at the bottom. We got at the top, so to me, I think that's still bullish, right? Price trend leading to the pattern has to be downward. So technically that doesn't qualify right there, right? If it's more of a hanging man, I think, V. That might be the case. Price trend leading into it is upward, right? So this is a hanging man. I don't know. I don't know. You tell me. Let's get consensus here. Do you agree that it's not a hammer and it looks more of like a hanging man based off of the rules right here? Which is, if I go down right here, the rules, it says, yes, looks like a hanging man, he says. So price trend leading to the pattern, it has to be upward, right? And number of candle lines. So one. Configuration, look for a small body candle atop a long lower shadow in an uptrend. So we go back to the S&P 500, we basically have that, right? So that's considered a hanging man. Now let's read a little bit more about this hanging man because we have in 1 week, again, this is for folks who just came in, this is the S&P 500. We're looking at the monthly chart, right? And what I drew right here is a rising wedge. And I was saying that, on the daily scale, it looks scary right here, right? On the daily scale, it looks scary because we had a 10% correction or pullback. And on the weekly, also a blip, right? Respected the 20-day moving average, which is my green line right here. And then on the monthly, which now the drawing's erased, we basically have that rising wedge right here. Now on the monthly, we're noting that basically nothing really happened because, well, it just it's still maintaining this structure, and it just it came out, but it corrected. So now we're talking about this hanging man candle, and let's better understand and advance ourselves, right? And see like what are the statistics or quantitatives that could potentially happen from here. Again, this is the more we practice this every Sunday, the better we get. So let's see what can we learn about this hanging man, right? Theoretical, because this is someone, by the way, so if you don't know who this person, this is one of the grandmasters of the industry, right? He spent 40 years doing statistical quantitative backtests on patterns and candlesticks. So it is one of the bodies of knowledge that you will learn if you go and get a official license called the CMT, the Chartered Market Technician. So it's like the CFA, right? There's the CFA, which is the Chartered Financial Analyst. Then there's the CMT, which is the Chartered Market Technician. So in the curriculum for CMT, this is official, by the way, in finance. So if you think this is like, mumbo jumbo or whatever gibberish, it's actually not. It's actually legit stuff. This gentleman's work is cited quite a bit. So we're actually learning from the best of the best here, right? John says, I noticed that the volume indicator you have on the left y-axis seems to change when you move backwards. Does that mean it's incorporating more data? If so, what do you think is the optimal amount of data to include? 100%, John, you are correct. So every time I adjust the chart, the horizontal volume or the volume left side, it'll adjust to what you see from left to right. So in other words, if I go into like just the most recent trading action, the last 3 days on a firm right here, then basically you see the volume in this area. So it'll adjust to what's on the screen, which I really like. That's why this is a really fantastic tool because if I want to just zoom out, right, and see if there's a bottoming action on a firm, I could zoom out into the monthly right here, and I could see that there's massive volume around this area, which shows me that someone or in an institution has been very interested in this area. There's a lot of participation here than the stock has ever seen at any other price, right? You never saw, at 160 here, you didn't see that much activity. You saw the highest activity ever at basically 12, 11.50, 12 bucks right here. So it's a very useful tool to identify support areas. And we were talking about last week, right? So I'll show. I know we're digressing a little bit here, but we're still on the topic essentially. But if I show you Ethereum, right? I think Lily had asked a question like, "Hey, hey Kay, where do you think Ethereum could go down to before it dipped recently right here?" And I said 2,200. And the reason why I said 2,200 because if you go right here, you see the volume right here. So that's exactly what happened. So imagine, we were actually trading at the 200-day moving average right here. We were somewhere right here, and Lily asked me like, "Kay, where do you think it could go down to?" And as I was looking, I was thinking like, all right, there's a lot of volume right here. So that previous whale has to be hanging out somewhere there. Look at that. We sold off. It literally went there and it bounced, right? It literally did a bounce right there. So this thing really works, but it's up to you to believe it or not, right? I mean, I love this form of analysis because this is us watching the markets here, right? Like this is us putting in the genuine hours to understand how the markets move. Because like the alternative to this, look, the alternative to this is like you could subscribe to alerts, but you'll never learn how the alerts are generated. So in here, I don't really necessarily provide alert services, but what I provide is like I'm learning with you guys by putting in the hours because when we see it over and over happening and it's working, then it registers in our mental proprietary database. And then over a period of time, you build up that experiential data, that data set or database in your mind, so that in the future you know like that's the trade setup I'm going for, and so you know what to play over and over when you start to uh, develop your database, right? Because if you come into this game like clean slate, no data, no historical data in your mind or any experience, then you're gonna play what your emotion says look hot. And a lot of times you're going to play things like, a hot penny stock that someone's talking about, like ASTS over here, right? At least at one point it was a dollar, right? You're going to play things like this because in your head, starting off clean slate, you probably have the more consumer oriented mentality. I'm assuming, and this is more of a statistical assumption, right? You have let's say, the vast majority have this more consumer oriented mentality where I want to buy cheap, I want to be cheap. And so if I'm going to be cheap, I'm going to be looking at $2 stocks, and then you might luck out and this $2 stock goes to $32, and then you feel like a hot shot. But then it's about the long run, right? You might make like, I don't know, $100,000 from this, but then later you're going to lose it. There's a good chance, there's a high probability that you're going to lose it because we're not practicing the foundation of like, what institutions practice, which is like focusing on risk management. And before you get into the trade, you structure what is the plan of the trade, right? So yeah, it's a learning journey. Because again, if you analyze the alternatives, the alternatives would be just reverse engineer it, right? Let's see, one is like you learn the process, right? Learn the process. Two is you pay for alerts, and you never learn the process. All you're paying is for the alerts. And three is you go free, right? You go freebie, but then there's like, different motives and agendas in that, right? So it's like marketing. You go the free path, and the other one is you go emotional, right? Emotional is because you get it. You're going from emotional to logical over here, right? I should put logic, but uh, what do I say? What L stands for? Learning, right? or logic, right? Learning the logic versus over here, you're doing it all off of emotion. Like, hey, what stock is everyone talking about? Oh, Tesla. I'm just going to buy Tesla. So I mean, that still works, right? You can still make money from that, but it's just not sustainable in the long run. So you could do one, which is rely on your emotions. Two, you go into free world and read whatever headline that says, hey, everyone's buying Bitcoin and Bitcoin's at $69,000 at the top, right? And you're just like, oh, it's free knowledge. I'm gonna jump on that. Then you might pursue like alerts, right? Which is like they'll I mean, this is hard too because they'll tell you when to get in, but you might not get in at the same time and you might not get out at the same time. So and plus you never learn. And then what we're doing over here is sort of like this ender here, which is like the logic, the learning the process so that when you understand the process, then now we're kind of tackling it together, right? Because I could also be wrong, but I need the help of like maybe the teaching and the community to remind me like focus on the risk management, right? When you're wrong, when in doubt, get out or whatever. The trend is your friend. Just practice these mantras. Don't be cheap. Don't be cheap. Learn to buy the highs at times when you need to. Learn to buy the lows or sell the lows when you need to. And then always respect your risks, et cetera, et cetera, et cetera. Hopefully that helps, John, to kind of give you. Wait, was it John who asked that question? Incorporating more data if you just asked because I was trying to develop indicator for myself. How did I even get to this conversation? I think I think I was just like talking and it just kind of came about. Anyways, yeah. So just understand that these are the different, I guess you would say, the four different stages of like what I see in the marketplace. A lot of people are playing emotionally because they don't want to fork out money or do the work, right? And then a lot of people, then the second tranche of people, they're doing it free. They're just reading like whatever cheap headline out there. What are people talking about, and they'll jump on that. That's bandwagoning. This one is like individual emotions. This one is like aggregate emotions or bandwagoning with the social crowd. It works too. That's called pump and dump. And then the other one's like they pay for alerts. And then the fourth one, I guess you say, is that you learn. So at some point, I believe like we gotta learn. So in here every Sunday, we gotta learn, we gotta practice, and we gotta see different scenarios, different stocks, understand the different permutations that exist because there's a lot of permutations, right? Small cap stocks, big cap stocks, options on big cap stocks, options on little stocks, crypto, technology, fund ownership, right? Which Bernard asked, who owns TT? Let's open up TT right here. We're going pretty quick, but it's the rigor that I like, I guess. Bernard asked about TT, right? So Train Technologies right here, and he was asking about the ownership. So this is another permutation or another variable to consider and learn about the company, right? I didn't look at the charts yet. I just went straight into like, all right, let's see who owns it. So to answer Bernard's question from earlier, he said he's curious about the ownership of this, right? So there's two types of ownership. There's external ownership, which is like the funds that hold it, the external funds, the institutions. Then there's internal ownership, which is like the insiders, like the directors and stuff like that. So again, you have to practice the skeletal understanding of this. This is corporate fundamentals, by the way. Corporate fundamentals is not it's not cash flow fundamentals or business fundamentals. It's more about like who owns the shares and stuff like that. The share ownership, who has incentives, who's really the boss of the company. Right? That's more like corporate fundamentals. And if they're diluting shares or what are they doing with finance? Are they borrowing more money? Thanks. This stock looks solid to me. So Bernard says that TT looks solid, and right now I'm looking at the external holders right here. What I'm looking for is not necessarily these big names. What I'm looking for is this side right here, right? So this side right here, it shows percentage of shares outstanding. So yeah, BlackRock could own 8.59%, but in terms of their portfolio, it's only 0.14. So to them, it's like it's not important to them, right? It's meaningless to them. What I'm looking for is someone with conviction. So the highest conviction I could see is a 1% holder right here. But generally, that's not enough. So what's telling me is that the ownership here, everyone's like, about a percentage or less, pretty much, right? No one's really risking heavy here. Okay, that's fine. That doesn't necessarily mean if it's bullish or bearish. It just basically means that there's a lot of like big investors that are holding just 1%, right? So they're just treating it as like, wait, so Bernard says, so it is all institutional investments? No, not necessarily, because you have to count the total, right? Because it's like what, let's say 8%, 8%, 16, 8%, right? 24. So add it all up. This is not 100%. This is probably like, I don't know, 30% or something like that. Then you also have these folks over here, the insiders, right? We want to check to see like, okay, now the operator, the CEO themselves, how much skin in the game do they have? So it looks like the CEO has 104,000 shares. 104,000 shares basically puts him at like 0.5% of the company. So he doesn't really have a big control of the company per se. He really his boss is really this whole stack right here, right? He basically has corporate board meetings with this whole stack right here, and they basically advise him and tell him what to do, right? So that's again, we want to analyze internal direct holder incentives and stuff like that. Okay, cool. Now we got a picture of the internal and external ownership. Let's now actually look at the chart, right? Let's look at the chart because the chart is the stock's market, right? The price is the market because the price speaks about what the market is doing, what traders are doing, what investors are doing, what the markets think and is expressing about this stock. And what it looks like right here, it looks like it's going to all-time highs. So right off the bat, right, one of my rules is if it goes to all-time highs, that's bullish. So this is all-time high. So I like this one too, Bernard, right? If you ask me, I like this one too. Now we can also dive deeper and understand, why is it going to all-time highs? It's located it looks like an Ireland business. Let's actually look at what the business is. Now we're actually looking at business analysis, and it looks like for some reason I can't enter because of some privacy. Let me see. Let's proceed anyways. Make sure. Okay, the website doesn't work for me. Well, that's sort of like a red flag. This looks like the classic strong getting stronger. Yeah, it is exactly the strong getting stronger, and I like it too. I like it too, and I would actually do calls on this one. And you can see that there's a large buyer that's been holding up this stock right here, right? You see that massive amount of volume. Again, going back to John's question, right? We could, I mean, this would create a bias. What we want to do is collect more data. So I zoom out, right? If I bring in more, you can see that in the last, we go back to August. In the last 1 year, except for this part right here, in the last 1 year, the biggest amount of price buying and selling activity happened at around 3:30. The most buying in the last 365 happened at 3:30. What does that tell you, right? This is great because it helps you calibrate risk reward. You know that the players are all playing right here in the last 365. So then you know that it will either explode away to the upside or downside. And right now you have confirmation of all-time highs. So therefore, and it's also like a bigger bull flag if you I guess zoom out to the monthly right here. Well, not really. It's still trending. This is bullish. This is very bullish, right? And I think this one could go higher. I just don't know how high. Uh, because I didn't. I mean, I'm only looking at the technicals, which is basically telling me the opinion of like the marketplace, right? What they think of the markets. But from a fundamentals perspective, I love the fact. Look, now we dive a little bit deeper, right? So I hope you guys are kind of following. Like I'm doing several dimensions of analysis, right? We just did a investor analysis, which is corporate analysis, I guess you could say, investor ownership, both internal and external. We looked at leadership. How much exposure does leadership have? Then we didn't look at the business yet, like the actual website, because I can't get to the website for some reason. But I mean, this one's a 8 billion, 17.68 billion dollar say revenue company every year. So it's a big company. I think it's just Finviz probably messed up the link. So this is a serious business, right? We're looking at the metrics right here. This is the fundamental metrics, which is basically this is like a snapshot of like its current value. And the reason why we turn things into metrics, right? Like like in other words, like you guys like you see the PS ratio, the PB ratio, price to earnings ratio. The reason why we turn things into metrics is because we want to measure like I don't know, like to balance it out and measure the performance side by side. In other words, like how do you measure the performance of a house and then a tall building, right? You could use metrics to basically balance it out and understand like fundamentally this is doing 10% and this is doing 11%. So that little house is actually outperforming the bigger building. But the bigger building has bigger liquidity or capital positioning, meaning like that could be $100 million building, but that little house could be like a couple $1 million in Silicon Valley. So yes, this is more performant, but you might not be able to fit your capital in here if you're a bigger fund. So you have to play the building. So you see why metrics are important. That's why they exist here as well. Uh, uh, John says, thanks. That was very helpful. Yeah, you're welcome, John. Bernard says, thanks. This stock looks solid to me. So is all the institution invests? I think I answered that one already. This looks like the classic strong getting stronger. Yes, this analysis is so valuable. Thank you. Hey, you're welcome, Bernard. Now, I mean, we've only done the technical analysis, which talks about the market's opinion of this right now, right? We could also apply additional layers of analysis. One layer of analysis is the recent pullback right here. And why is that important? Because the S&P 500 recently pulled back 10%. In which case this stock, right, from its highs, how like basically what I'm doing here is I'm extracting how did macro impact this stock. So it also caused the stock to go back 12%, right? So this one, this one's also pretty sensitive to the S&P 500. This is why we track the S&P 500 because majority of the times it tells us like what every other stock is going to do, right? So like if it's one stock, I mean some of the pros like Minervini, and I think Ivan probably knows this. Like some of the pros will say you don't need to look at the S&P 500, and it's true. Like all you need is one stock to make your money. So you don't necessarily need to look at the S&P 500. You just hone in on that one stock and focus on your risk parameters, your risk management. But if you want to get more dynamic, right? Because there is knowledge in analyzing the S&P 500, and let me tell you what it is. If you understand that the S&P 500 is rallying with everything else, then you basically know you're in a euphoric environment, and you know that one position you're focusing on is probably going to really work. So there's pros and cons to analyzing it, right? Like you can and you it might benefit you from a bigger picture perspective. But if you're really just focusing on one stock, then you don't really need to, right? What you always need to do is just focus on your position risk management. Like if it doesn't meet your criteria, just get out. It's like I guess you could say it's like dating, right? You meet the guy or girl and you guys have dinner and it doesn't meet what they say one thing, it doesn't meet your criteria. Do you stay? Right? They tell you like, hey, this is my credit score. It doesn't hit your criteria. Do you stay or do you give the guy a chance, right? Oh man, that's funny. But yeah, whatever dimension you're measuring value on, right? It could be the credit score, it could be educational background, it could be track record of I don't know, like whatever, right? Career, network, personality. There's so many dimensions, which is the same thing with a stock. There's so many parameters to consider, but if we practice these parameters long enough, then yeah, like we get pretty good at like just understanding the nature of a stock, and that could really aid us in coming up to a conclusion of like what to do, right? So I love it. I love it because over the years I got to teach and analyze these different dimensions to the point where now we're analyzing things like hanging man candlestick patterns and stuff like that. This is like the upper echelon of like technical analysis, by the way. Most folks actually don't get to this level, but hey, I'm willing to run it with you guys and kind of break it down and help you learn it, right? Like the way I'm teaching you is like let's just analyze a stock and use all the analysis, but be aware that we're using several dimensions of analysis here. And so that's really the game that we're playing because, the stock market is, I was actually talking to my mom yesterday, and she's more in the Asian people and owning like a nail salon and stuff like that, right? And we're chatting over dinner, and I was telling my mom like, a lot of things I do, it's more in the in Vietnamese we call it kinh tế vô hình. I think if that's pronounced correctly, or in other words, the intangible economy, right? The work that we kind of do in here, it's really intangible, and so the only way I could describe it to my own mother, it's like imagine this like close your eye, like okay, what you do today requires physical labor, and that could be tiring on the body. What I do compared to what I do, it's more intangible. It's the intangible economy, and it's not physically laborious, but it's more mentally abstract in thinking. And so, in order to practice and get better at that, it's kind of like a lot of things we do in here. We have to close our eyes and think about different abstractions, right? So if you close your eyes, what abstractions can we think about? It goes back to like me saying that on this planet, at most you could probably see is like 50,000 people physically. But we know when we close our eyes or look at a chart, there's 8.1 billion people on the planet. So you see what I mean? There's a massive it's certain things that you can only, how do I say this? You could go further in life by closing your eyes than you can with your eyes open. I know that sounds provocative, but that's really what it is. You could see 8 billion people, 8.1 billion people on the planet on a chart, X and Y axis, than you can with your physical eyes. It like it, in this life, you can only have maybe like they say 150 real life connections, and not all of them will know you deeply, but only 150 people in real life. that's like scalable. But on the internet, influencers could reach 1 million people, right? So think about that. Think about like, network effects and scale and what we're doing here, right? We're analyzing something that's pretty big, which we just analyzed like a $17 billion company. This is bigger than any real estate out there, right? So this is the more scalable game. In which case, real estate investors they prefer to see the physical assets, and they attach like, hey, if I can't see it, touch it, feel it, whatever, or smell it, I don't know, then it's not real. But then at the end of the day, to me, it's like, look at the underlying infrastructure. Like we're all under the government here, and they provide the legal ownership of whether real estate or a corporation, which is an entity, which is a corporation is an organized group of people that is capitalizing on a market, right? So it's the same thing to me. Like it's just at the end of the day, they manage the ownership contracts, they distribute the ownership contracts, and we're basically playing the same thing. It's just that this game is more, scalable and real time and more aggressive. So yeah. Sorry, I I was talking a little bit too much, so I had to drink some coffee, but I ran out of coffee, so I'm talking today with, well, I have ice in my mouth just to try to get some water here. Um, let's see. John says 17 billion. Let me go up. 17 billion in sales last year for TT. Last week PayPal was 29 billion, and that seemed to be very bullish for you. So John, that doesn't necessarily mean it's very bullish, right? Oh, I put John for some reason, so I was gonna put PayPal. So last week I talked about PayPal more so because I was explaining to Bernard like the perspective, right? Because every stock has a different setup that we need to understand. Like I see that PayPal is bullish right now from the chart perspective because it's moving up, right? The trend is my friend. Now, zooming out, what I'm like this is a different type of play. This is a play where we're measuring from high to low. It's down 80%. So this is a blue chip that's down 80%. And the reason why we were looking at the sales was because Bernard made the comment like, and again, this is his constructive feedback, which is good too, because we got to take into consideration of what everyone's thinking. That's how we learn, right? So Bernard's thinking was like, hey, but wait, like I don't really see PayPal active these days, so I don't think it's relevant. So I said, well, let's take a look at the sales, and then what we saw was that it's actually 29, 30 billion in sales, and that's actually that's with a B. That's $1 billion. So that's actually really impactful. So then we came to conclusion that the majority of PayPal's business is more like behind the scenes infrastructure, right? It's kind of like, like we don't think about the Wi-Fi, we don't think about the electricity, but yet that infrastructure is so large and meaningful, right? So this is kind of like the electricity or Wi-Fi of like, financial transactions on the internet. So it doesn't necessarily, just because it's 29 billion doesn't necessarily mean I'm bullish. For me personally, I'm bullish when the market's bullish. And right now on the daily chart, it's looking kind of bullish, right? So I'm more of like a mimic or whatever, like if it's like Pokemon, I'll be a Ditto, I guess. But I'm bullish when the markets are bullish. I let the markets tell me and teach me what it wants to do. I don't try to tell the markets what to do because I noticed in the past when I tell the markets what to do or try to force that, no, the market's going to go this way, I tend to lose. And that's when I know my ego kicks in. So I'm trying to manage that too. I mean, I think it's a lifelong thing. But you get better. You get better when you start stacking the frameworks and understanding like, the different bodies of knowledge here. Uh, Bernard says, in my opinion, any stock portfolio should have about 50% invested in 20 stocks with this shape of graph. Yep, stronger getting stronger, 100%. And when it's no longer, dude, that's Bernard. You're basically like a trend follower. That's exactly what I'm doing, but I'm kind of like fine tuning it, right? But you're 100% correct in my opinion. I like that phrase, right? You want to be playing stocks that are going up because the ones that are going down, there's just not like we undermine how valuable a trend is. Like why does a trend get created, right? We got to really think deeply about a trend because the mantra is the trend is your friend. And that's actually really important, right? I'm trying to think of like, what's this here? This is a really good one right here. So this one is Coca-Cola Consolidated, right? We need to really think about what the philosophy of what is a trend. Oh, wrong one. What is a trend, guys? Right? A trend is basically defined as 2 points make a trend line, right? But a trend, if you think about it, is created when something big is making it, is trying to get in. Think about that. That's actually wisdom right there. A trend is created in this game when something big, like an institution, is trying to get in, right? I know it's just like a line on the screen, but it represents a lot. It's really powerful. A trend is indicative, like right here we have a channel essentially, right? If I draw the channel, this one right here, see that? So this channel right here shows that something big is trying to get in, right? I don't think it's, uh, okay, some comments coming in here. Uh, let me read this. So, strong getting stronger, 25% on strong companies that beat results, but got it hit down with low guidance and 25%. I mean, earnings are earnings, but I've seen a company, we've seen this over the years, right? A company could have great earnings, but then it sells off, and vice versa. So I think what is true at the end of the day is the trend. As long as there's a trend, it's basically showing some large player is trying to get in. If it's trending down, then it's showing some large player is trying to get out, or a group of large players. Visa is so true, K. Our senses are valuable but limited. We need to appreciate the bigger picture even if we can't see it. Yeah, you can see a lot. You can experience a lot of life by just closing your eyes. It makes me understand like these monks now, I guess, who do meditation. I don't know. That's a joke, by the way. Doris says, Kay, I vaguely recall that you feel if you find a stock that is down 70%, you are very interested. Is my memory correct? That is it is correct, but I must share with you that that's a very particular type of play, right? It's different. Like any, so if it's down 70%, I like it, but it needs to meet a certain criteria, right? It goes back to the climatic selling and difficult rally, right? And the best recent example I could think of right now is Netflix. So Netflix was down 77 or 80%. And it took, it climatically sold down in a period of like months, but it took it years to get back to where it is today. So yes, I do like it, but you will pay for being cheap. That's the thing. Like that's what I'm saying. If my mantra is like, don't be cheap. Trust me on that. But if you don't want to take the advice, I'll show you why. So you see this right here, Doris? This is Netflix right here. I have it on the monthly, and you see climatic selling right there. Climatic selling. That happened in like about 6 months. And then after climatic selling, it took it about 2 years to grind all the way back up. So if you're being cheap, right, you want to buy at 200 when it's down 80%. That's fine. But this is like a leaps play. You got to expect like it's going to take 2 years to recover. So in other words, climatic selling could happen in months, but it'll take years for it to recover. And the philosophy, the theory, I don't know if it's theory, it's actually the reason behind this, but let's just say the theory behind this is that you have so much overhead supply from the left side. In other words, you have bag holders on the left side right here that they try to get out as the stock revisits. Then only then when it clears all-time highs, then now the markets are in a mode of like market discovery, right? It serves a different process now. It's in discovery mode because like wow, we just eclipsed all bag holders, and it actually wants to go higher. So believe it or not, now that Netflix is about to be above 700, I'm watching it too. I tried some calls on it, but it didn't work out, so I'm waiting. But once it goes above 700, 703, 705, or whatever that level is, we go into price discovery mode, right? And I need the market environment to be in my favor. This thing could probably run to $1,000, right? That's called a breakout, by the way. But that's also very hard for a lot of people because like it's just mentally like I'm fundamentally a cheap person. I cannot buy highs. But that's then I can't like fundamentally I can't buy highs and I can't sell the lows. But then like that's what you kind of have to do if you want the performance. If not, then if you want to buy the lows, then you got to think really long term. So yes, Doris, I do like it, but it's a different setup or variation or permutation for a different type of strategy. So if it's down 70% like Boeing, I do like it and I'm watching it. It's on my radar. But I'm aware that a move like this will again climatic selling follows by years of recovery. And look at this. Like talk about prediction, right? This is climatic selling from up here, right? Climatic selling all the way down. That happened in like a period of like 6 months, down 75%. Look at where it is now. One, two, three, four, five, going on 5 years sideways. That's Boeing for you. Meanwhile, its peers like Lockheed Martin and RTX or Raytheon, they're going higher. And it speaks about, geopolitical issues probably. I'm just like, oh man, like, are missiles flying? Right? So this one wants to go higher. So I think yes, Boeing is severely, relatively undervalued, but it's going to stay that way for a period of long time because the markets, again, if you understand the movement and the motion, the mechanics of the markets, stocks don't move until it clears like overhead supply, and that's the theory of it, right? Or actual practice of it. But yeah, Lockheed Martin, like it's trying to go higher here. And I know a lot of people are going to say like, oh, I missed it at 500. But if you said you missed it at 500, it's at 560 now. Same thing with SMCI, right? I think SMCI was Daniel's biggest trade this year, where like, in the first 2 months of the year, the guy's already up like 200K, right? So right here. So we were playing it over here, right? First 2 months of the year, he already made, quarter million. It's crazy. Um, like that and then after that it's just like boom, right? So it is almost like climatic selling leads to consolidation of years. This is climatic buying leads to consolidation for many months, as you can see right here. um, so yeah, and at the time that was an all-time high right there, right when it broke 400. 400, I didn't think it run that high, like it ran to like this much right here. So again, what I've also learned is like from the fund managers, like the ones who made it big, like you really make all your money in like let's say in a career of like 10, 20 years, you made all your money in like 2 to 3 years. So it's just somewhere in that journey, right? So just imagine like your journey is 20 years. Somewhere in 1 year, you'll just make it all. 1 to 2 to 3 years. It just happens like that. I don't know. I shouldn't say I don't know why. I actually do know why, or have a hunch on as to why. Um, but it's just like that, right? Um, and there's always going to be new cycles in the markets because when people make a lot of money, they want to redeploy it as we look at market, trading flows and stuff like that. Uh, uh, I was going to say Carrie, but Bernard, Bernard says, I also believe the 5-year graph is very telling. Look at 8, Ring, and Band. They're all down 80 to 90% and losing against strong Microsoft and Amazon, living on borrowed time. Yep, I agree 100%, and that's why you should be focusing, like Bernard says, on charts that are far up to the right. If you focus on charts that are far up to the lower right, far down, I mean, to the lower right, then you got a problem right there, right? Like this is what I was saying earlier, right? Which is like the most bearish one, where what I was anticipating on the S&P 500 was basically if you just had like something like this. So scenario number one would be like just like two candles and nothing happened, right? Just straight up blip. What we saw instead was we got basically a dip and then a V bottom, right? That's number one. This is number two. And then the other one I was anticipating, which didn't occur, was like sort of like a dead cat bounce. So this is number three. I was actually anticipating this one on the S&P 500. It actually didn't happen. And then number four, which is basically more like this and then down. And there's actually number five. Number five is just like straight down and it doesn't stop. So that's number four, and then that's number five. So again, what we are looking at with 8 by 8, it's more of like this one right here, number four. All right, and again, S&P 500 right now is number two. We got a V bottom, which is technically from bullish to more bearish over here, right? So this is looking very bearish. You want to avoid that. You actually want to short that. But the problem is at this market cap, 250 million, you don't know what ferocious private equity firm would go in and be like, nah, we're gonna flip this, and it goes to 500 million, and you're against yourself. So that's also the scary part too for shorting, right? At such cheap levels. This thing could go either way, but it leans more towards the downside. Like let the forces of the markets tell you what it wants to do, and it tells you it wants to go lower, right? Because if you're not listening to the markets, then then you're listening to yourself. and then you need to check yourself if you trust yourself. Questions to consider. Okay, I mean I really want some water, but forgot to refill my coffee or water. Okay, let's see. If I need it, I'll pause and I'll grab it real quick. I'll come back. Let's go on to some of the stocks. I mean, we've had a dynamic conversation so far. Hopefully, it was helpful. Um, let's keep diving in. So if you guys have stocks, let me know. The other stocks that Bernard mentioned, we looked at 8x8, Ring Central. We zoom out. It's probably the same thing. The whole industry is just like in a bear market for this particular industry. Look at that. Oh my gosh, right? I mean, this is why the stock market is the best game in the world, essentially. Why? Because you have, an opportunity to make massively on the upswing and then an opportunity on the downswing as well. This is why this is the best game in the world, in my opinion, right? Because, humans will always be greedy and fearful. This is a perfect example of maximum greed to maximum fear. And it goes to show it's basically the chart of like life and death, right? A chart of like an entity that ran up to its greatness, and then an entity that fell to its you know collapse essentially. It's wild. Um, but yeah, just understand that stocks go through different phases, right? This would be phase one now, and this would be stage four, right? Stage three, stage two, if I recall. I need to go consult Stan. The other the different grandmasters that exist out there. Um, the trading grandmasters. Let's see last company. Well, there was also ban. So let's pull up bandwidth right here. Let's check out the chart right here. These are ones that you never want to buy, in my opinion, unless you have a plan. Okay, like this is 400 million. PayPal's a little bit different, in my opinion. PayPal's kind of like a Netflix. But excuse me, but expect that one to take years for it to recover, and you'll pay the price of being cheap always. Um, now, believe it or not, you pay the price of being expensive, you actually get rewarded, right? Um, and you could actually see it in the chart. If you pay the price of being expensive right there, right, which is basically the breakout right there, 90 bucks. Now at the time that was at all-time highs in 2020, right? From 90, you would have been rewarded $100 because you paid the price. You weren't cheap. So and this mantra is so true in everything in life. Like, it's like I almost feel that if I charge more, I'd probably go further because the right people show up to your door versus like if you go free, which I've learned the hard way, all the wrong people knock on your door and they give you a call every freaking day. Every day I get multiple spam calls at this point. It's like I should get a new number, right? But that's the price you pay for when you do things for free. I realize versus like when you charge things, the price mechanism or apparatus, it filters out the quality folks, and then you have more of a quality conversation. So in a way, like Bernard gave me the tip of like, hey, you should post a password change somewhere. But in a way, if I make it a little bit difficult, then it filters out people who are technically challenged, I guess you could say. But that's not nice of me as well. You guys hear that jet? I hear another jet flying over Silicon Valley. It's pretty loud. It's like yesterday I also heard a jet flying over. Where was I yesterday? In San Jose as well. That's a pretty loud airplane. Anyways, let's look at some of these other stocks. So let's go to some of my picks over here. I do want to analyze the FANGs, which we kind of did in the beginning earlier. We looked at the FANGs right here, and if we collectively look at it, again, this is not the FANGs, the Magnificent Seven. Meta, Microsoft, Nvidia, Tesla, Google, Apple, Amazon. I combined them all into the indicator right here, and basically the indicator is now signaling along. So again, for those of you who came in late, I was, the first 10 minutes, I basically was saying like, what I have right here on the screen, this indicator right here, this is a swing trend following or swing trading system, right? So it's not going to be able to time this reversal area down here, right? So moving forward, I need to figure out what's a great way to time a reversal. But anyways, this is what you see on the chart right here. This is the consolidation of the Magnificent Seven. So Facebook, Microsoft, Nvidia, Tesla, Google, Apple, and Amazon, and collectively you have a long signal, right? So that's interesting, right? We might go into swing long here, but it's getting difficult because we are in a negative seasonality. And again, the reminder is even though we're in a negative seasonality, that is just a baseline of like, what to anticipate. If it doesn't follow that, then we have to make adjustments because we're always trading in the next fine-tuned situation, you could say. Would like your analysis on VST and SMCI as well. That's interesting because SMCI was actually next on my list right here. But let's do or actually IWM was also on my list. Ivan, it's kind of funny. Um, it's not even a joke. Look, I pull up the list right here. So I didn't have topics today, but the Fangs and then IWM and then SMCI. So yes, they are on my list as well. It's good that you guys are looking at it. Kay, can you get Google Voice number? It filters the calls by name. I could, but I mean, at this point, I don't mind the spam calling. I mean, it's like whatever to me. So let's do VST real quick. Let's look at what Vistra Corp is. This is utilities. So I'm not too hot on utilities. But what do I think of it? I mean, above 50 MA, recent trend line channel downtrend breakout, right? So remember the big player creates the downtrend, right? And then now, out of that channel right there, it's looking a little bit different. So now it's outside the channel. And then again, we're telling the story of the stock, right? It's outside the channel and it's consolidating right at the $80 mark. And if you look at the volume, right? Delete that. If you look at the volume, why is it doing that? Oh, I think it's because I was holding it. There you go. You see that the majority of it is right here. So what do I think about it? If you were to force a trade on me, well, one is like I'm not interested in trading this one. But if you were to force a trade on me, it looks like a long and the risk, right? Where are you planning to get out? The risk would be these levels right here. So it could be the prior bar is low, or well, in this case, the prior bar is low is this one right here, right? So those levels right there, or the 50 MA, which is also right there. I know that one's a little sloppy, but that's where the 50 MA is, and then also the $80, right? So all those lines that I just drew right here, those are all areas to get out, right? It's a long, but the lines I drew, focusing on where to get out. And then my rule, like my criteria is that it needs to rally from here. If it doesn't and it hit my lines, I will respect my lines, right? The problem is when you don't respect your lines and it goes here and you're like, oh, it's 70. I can't sell it now. It's gonna have to rally at some point here. That's the problem right there. You have to respect those lines, right? Whether the stop is that previous bar is low, or that previous bar is low, or the 50 MA, or the breakout area right here, right? Or the $80 high volume area right here. So those are areas to get out. Like now you have a plan, right? That way you maintain that when you get in, it's green, and if it's not in your criteria, you just get out. Doesn't hey, you know what? Like this date was nice and all, but it didn't hit my criteria, so have a good day. I gotta go on to the next one, on to the next trade. Uh, so yeah, that one actually looks good. But remember, I focus on the stop. Focus on the risk management first. The other one's SMCI because SMCI actually looks the same thing. Now, I think IWM is an interesting one, right? Because in Bukowski's analysis, and again, Bukowski's a 40-year veteran over here, right? He talks about, pattern. I know a lot of momentum traders. They talk about the patterns and the breakout trading with the bull flags and all that. But what no one really talks about is busted patterns. And that's why Bukowski over here, he is a distinguished gentleman in my opinion, because he actually goes and analyzes busted patterns, right? So this is the opposite of what most breakout traders would be doing. So yes, historically, this actually looked really good. It was setting up consolidation for going higher, but instead it busts and went the other way. So by Bukowski's principles is that when a bull flag fails, it actually is a bear flag. You need to learn to flip it the other way. And then, that would have been great right there. But now we went down to the 200 moving average right here on IWM right there, and we started recovering. So now it's like, all right, now it's like almost back to where we were, right? So it's almost like you have to kind of disregard this, right? So what do I think of it? I mean, in the most recent trading action, it broke out right there, right? So it's going to be bullish. It's actually looking really bullish. The volume kicked in right here. But the part where it's going to really run is when it really clears the highs up here. So maybe around that area right there. Because that if we go back there, right, essentially what happens, Ivan, is we're basically back, if we do something like this, we're basically back there, right? So it's going to go back in and basically we resume this, this bull flag right here. And that's going to be really bullish, right? And if that's the case, then SMCI is going to be really bullish as well. So in other words, the way I'm looking at it is I'm neglecting this blip right here, and this is a blip because, well, one is like we created a V bottom and we came back in. So I mean, yeah, I'm neglecting it. It's not good practice, but man, this market has been challenging as well, right? Now keep in mind where did it go down to? Ah, you guys see that? Where did it dip down to? Right? And wait, hold on. Where else did it dip down to? The 200-day moving average right there. I didn't click on the right one. The 200-day moving average right there. See, it works. It works, but it's still not easy, right? Like you still gotta develop the instincts, the guts to execute on all this. But that's what I'm seeing with IWM, Ivan. Ivan says during 2016 there was not pullback in September and October. Maybe this time. Again, the seasonality is just a baseline of what to anticipate, right? It doesn't necessarily mean that what happens in 2016 will happen again. So what we need to take into consideration now is we fine tune off of that baseline. So that baseline says during these months we sell off. But if I'm not seeing a sell off, then it might not correlate this time. So at the end of the day, the final decision is the markets, right? So what you look on the screen right here, this right here is the final decision right here. Doesn't matter whatever other tests you have, the final decision, the vote comes down to this what's on the screen right here. It's what the markets want. At least that's how I kind of view it. But I'm also looking to fine tune my knowledge, right? Get better over the years. Uh, but yeah, we know that there's massive support here, and we know that we're probably going back into this pattern right here, right? But it's gonna require some time because this was also very scary for the markets. I mean, man, we recovered very quickly, I gotta say. Um, but yeah. Let's see. I mean, again, what could happen in the next 2 weeks here? Because I won't see you guys next week. By the way, next week I'm traveling out of the country, so no meeting next week. There will be no report. It's Labor Day, but after that we will continue to meet. So no meeting next week. Reminder: no meeting next week. But when I come back, we'll get back to it. I could do this while traveling, but it's I was thinking about I wanted to maybe I don't know, but yeah, we won't be meeting because I like being on my desktop a lot more. Okay, so that's IWM. So if that's the case, depending on what IWM does, then I think it's going to influence SMCI. So we need to pay attention to SMCI as well. So looking at SMCI right here, uh, what do I think about it, right? So one is we could see that the volumes right here. Is there a stop in Vietnam? No, there's no stop in Vietnam. Uh, so if we look at SMCI right here, right, we know that the vast majority of action happened around here. So let's highlight that. The vast majority of action happened around that price range right there. And what we know is that it's currently below that. So, okay, that's bearish, right? We also know that it's below the 200-day moving average. We also know if we overlay several layers of analysis right here, we also have Bukowski's, basically sort of a bear flag right there, right? That's another layer of analysis, right? What other layers of analysis can we see? We also see that the stock has been in a channel. So there's also a channel right there. Again, these are, again, 2, 3 points make a trend line, right? So we know that it bounced right off here, right? So this is what we know about the stock. We know that the players love this price, this 800 right here. So 800, 900, that will be resistance unless we go back in there, right? What else do we know? We know that it's below the 200-day moving average. That's bearish. We also know that there's a bear flag that's setting up right there. If you can't see the bear flag, right? Basically, right there, right? That's a bear flag. And at this point, it could go either way. That's really the case, right? Because if IWM outperforms, then this one starts to outperform. So if IWM breaks out, right, then the possibility is that we go up and we start trading in this range again, where the gravity again. we either explode away or towards the liquidity pools, and this is a liquidity pool, right? A price pool right there. So that's why I think of SMCI. It could go either way. It could go that way, which it seems likely right now, if folks are trying to buy. So in that case, if we go up, then this bear flag becomes a busted bear flag. A busted bear flag, by Bukowski's definition, is actually bullish. So it becomes an anti-pattern to itself, right? So that's the scenario right there. And then if that's the case, then the next level test is probably that 1,000 mark right there, right? That'll show us that now we want to explode away from this liquidity pool. So if we make it to that level, oh, if we make it to that level, then it'll probably look something like this, right? Then we start to rally. So there's still a lot of testing that needs to be done here, right? So that's why I think of SMCI. Very similar to IWM because it's, well, actually it's Nasdaq now. Right? It's not a small cap anymore. Right? It got inserted into the Nasdaq index. It used to be Russell 2000. Uh, Praveen says face-to-face meetup, please, September 21st weekend. I want to come to a face-to-face meeting from Sacramento. So I am planning a face-to-face meeting. But I told Daniel, let me come back from the family trip here. When we come back, we'll plan. But moving forward, we plan on doing the Milpitas Community Center because it's a room that fits over 300 people. That means I could scale it to 300 people. That'd be cool because we'll become a little known in Silicon Valley, I guess you could say. But I also, if I don't know, I love your guys' opinion on this. Um, I think being low profile and fame is not being low profile is the way to go. Like I don't think being famous is worth it. Like being wealthy and private is the best thing. I don't think I would want to be like, famous like Elon Musk. I don't know if you guys feel the same way. Would anyone in here want to be famous like Elon Musk? Like, yeah, you be wealthy, but at the sacrifice of your privacy, is that worth it? Um, I don't know. I rather be known within, like, I don't want consumers to know about me. I realize that because the more consumers that know about you, the more it's like they create all these like this, I don't know, like views of the person, right? Consumers could take you really far, but they also could take you down. If you again, it's just at that scale you don't want to be there. It's just like food, right? Like food is one thing that you don't want to consume at scale because you know that food at scale, like manufactured baby food, processed baby food. Let's look at this real quick, right? This is something that none of us humans want to consume. If you actually ever look at it in a factory, right, they put all these different ingredients in it. So look, this is the type of food that you don't want right here, right? This is the food that will, it's compressed, it's engineered, and there's a lot of calories. It's going through a process right here. The only process that I personally want is just whole foods from the ground up, right? From the soil and from the planet itself. So these are things that now in my age I avoid more and more and really think about. And man, it's wild, right? These are the foods to avoid, all the processed food. Um, because this is probably, if it's any investment advice, guys, like we got this one moment on this planet. It's probably this advice right here. It's like we got to eat cleaner food. That's the way it should be, right? Like the me learning about the different eggs, right? The eggs, pasture, pasture raised, not pasteurized, but uh, like the different yolks out there, right? So I mean, this is pretty obvious. Like I think some folks already know this, but I didn't know the quantitative difference, right? I think I don't have the article or wherever I read it, but the difference between these two eggs right here is that this egg right here is actually like quantitatively it's 7x more nutritious than this egg right here, right? So that's a big difference. And this is the type of eggs I buy now because I mean it's well, I guess you should try the difference, right? And then milk as well, like A2 milk. Have you guys tried A2 milk? It's a higher quality protein. Praveen says face to face is private and this Zoom is public. Face to face is private and this Zoom is public. Well, this Zoom is actually private because now at this point, anyone that wants to be a part of this community, it's only on this Zoom now. Yeah, there's a live stream, but all they get is audio. They don't get the visual, right? Maybe the visual for like the first 10, 15 minutes or whichever, but that's just, yeah, that's just how it is, right? Like I'm gonna favor the people who pay and not the people who are cheap. That's how it should have been, right? So people that are, pay, like not just paying money, but like paying attention, paying their time, I should really focus on you guys and try to make you guys successful, not the people who are like watching for free and, trying to, you know who you are. So yeah, and plus like now that it's more private, I can actually talk more about, things that I didn't feel the freedom to talk about, right? So there's pros and cons to like public and private. It's a lot more private now. K, you have more meaningful relationships among smaller groups. Just a thought. Hey, thank you, Doris. That means a lot. And that's the other thing too. Like we want to build more meaningful relationships. So that's why I encourage you guys. Like, you guys know me. Like, feel free to ask away, to your heart's content on this platform in Zoom, and I'll do my best to share with you like the industry best practice as I'm learning along with you in the journey. And not just like, stocks and stuff, right? I'll teach you about other dimensions that I'm learning about, which is like food and health. Um, what is A2 milk K? Just curious. So A2 milk, I'll pull it up. A2 milk. So different milk out there, right? Well, there's also like ultra pasteurized milk, which is like, so think about this. The problem with our food system, I realize, is that one is like, well, we got 8.1 billion people on the planet, right? And then, but the other problem is that, uh, 8.1 billion people on the planet, and these farmers, they have to supply milk to a lot of people. So what do? They think about scale. And so when you think about scale, you also are scaling up and giving more milk to people, and it probably increases liability of like, oh, if they, if they drink bad milk, then they're going to sue me, and I can't scale. So what they do is they ultra pasteurize it, which is like they heat it up to a point where it destroys the nutrients essentially. That this is my understanding of it, but I recommend we all read more into it. So ultra pasteurized milk, same thing with orange juice, right? They heat it up to a point where everything is just like it's just like sugar water, I guess you would say. So the nutrients are actually basically burned away or boiled heavily away. Um, and so we think about non-scalable food. Let's say non-scalable food is like you own your own farm, you own your own healthy cow, and that healthy cow is like a certain grade, which is like A2, and it has more benefits than A1, right? So the difference is like something like this right here: A2 milk, A1 cow versus like A2 cow. So contains A1 beta casein, right? This one has A2. Easier and light to digest, not easy to digest. Obtained from international cow breed, obtained from Indian cow breed. Less nutritious, more nutritious, right? So A2 is more nutritious, right? That your body could digest. So you're truly feeding your body. This has been this is what we lost in thinking about food at scale. Food at scale, like the only thing I want to talk about scale is like technology, business, and like wealth. I'll talk about scale all day there. But food, oh man, I do not want to eat scale food. Be careful with scale food. Food that where the manufacturer's trying to scale because they'll like Nutella, right? If you dig up Nutella, it's like oil. It's really nasty, but we don't realize this. And again, like if we don't invest in this, then we'll pay downstream. And you guys know me. The whole point of existence now is like we want to optimize our day and just know that we're investing little by little each day, and then in like 10 years time, you'll see the compounding that results from it, right? So look, this one A1 milk causes gas, upset stomach, bloating, and ulcers. A2 strengthens digestive system, right? And then this, I don't know about BCM7, but I would say read into it, right? It's just more natural. It's more from the earth, I believe, versus like the other ones are from humans who are out to capitalize on scale. Trust me, I've seen it firsthand. I've even thought about it firsthand because like it's like like the networking events, right? I couldn't scale up because if I scale up, then like something has to give. The cost has to go somewhere else. And when you think about that long enough, yeah, it applies to our food system as well. So just be smart out there, all right, about like the things that you buy these days. Nothing is what it appears on the marketing. It's just not right. But this is how the world is currently solving scale. You could develop a lot more quality of life by understanding just reading ingredients, right? I read food like my SEC filings. Just look at the ingredients. Okay, so going back to it, right? I mean, the number one thing you could do is just change the oil that you're cooking with, really, or cook with ghee, right? Which is like, or beef tallow, which is like, beef fat, right? This is what I'm reading, but I also encourage other folks to read into it. Anyways, guys, I don't want to digress too far from stocks. Hopefully that was helpful. Uh, let's see, F2, did I read this? No, no, wealthy and stealthy, V says. Yeah, so yeah, going back to that discussion, right? Like I think being low profile and wealthy is way better than to sacrifice your privacy, right? Like I was sitting at the cafe yesterday and I was just like, I was just so thankful that like I have my privacy, right? And to realize like there's other folks in the world who are like an influencer or whatever, like they've lost their privacy. It's just not nice. So being low profile is much better. John says I've heard that flags, bullish and bearish, are one of the most common chart patterns for stock markets to forge. Um, I mean, I mean it's structural to the markets. I wouldn't say it's. I mean, it is most common, yes. But Bukowski actually went in there and did a statistical ranking of the bull flags and bear flags. So the high type flag is probably the number one best pattern in the stock market that yields the best results. But there's other patterns as well that could also have substantial performance. So when your comment is saying that, are one of the most common chart patterns in the marketplace, um, I would say that it's just another second in the marketplace because every second you have, like every pattern creates itself, like, whether it goes like this and consolidates, but then it goes down, and then you have like, I don't know, a broadening wedge, right? Like it's a little bit of everything. So I don't know, like I think once you see it, it's not the only one, right? Like it's not the only one that you could play, and different circumstances will require you to think about different strategies and how to go about it. Like this one's like a declining channel, and Workday broke out of it, sort of set up a mini bull flag right here, gapped up on high volume on earnings above the 200-day moving average, right? So that's a little bit different. Like I mean, this is like a tiny flag. It's not a high type flag, and leading into it was a decline, not an uptrend. So there's several rules, and that's what I'm saying. Like you want to go through his index and or even his picture index and kind of understand the different the different setups that exist out there, right? Because this is someone that has gone the distance. Like this is his website, or this gentleman right here is like the deep orange egg, right? It's potent and he did his work. And that's what you want to look for. You don't want to listen to the marketers. But let me see if I can find the high type flag. Where is it? I could just type it high. There you go. The high type flag right here, right? Now it's funny because I own his book. And in this overall performance rank right here, right? I think this is not updated. It's ranked number 30 out of 39. But I actually own his encyclopedia, and I can show you the image. Like this is, one of the best setups in the game. But it's not the easiest for a lot of folks because they're not able to buy the breakout, right? Because it's like, oh, I can't pay more. But if you learn, then you will experience greatness. I, and I hope to keep learning too. All right, which means I hope to keep experiencing greatness. Nisha says, "What is the best way to assess trend lines accurately, and also the mid lines when the patterns are above or below?" Yeah. So that's another area of analysis, right? So, for example, what you're talking about is I've seen another guy who's done a similar analysis like that. And basically what you're referring to is like, let's say, okay, let's do this one. So like the S&P 500, right? So basically you got a top of the channel and then you got the bottom, but then like you also have the midpoint. And I don't know if that was like Andrew's pitchfork, but basically there's also a midpoint here that you could trade as well. You see that midpoint right there? So yes, there's also that strategy. There is, again, the markets are fractal in nature. So have you ever heard of like fractal patterns? Again, this goes into like, fractal patterns and Elliott wave theory and stuff like that. but there are patterns within patterns within patterns. And again, the only way to see these patterns is you have to spend time with them. You spend time enough with these, patterns of life, quantitative phenomenons, then you'll have a good time, I feel. And that's why I'm here every Sunday, right? Because I realize like, yeah, like you have to practice this stuff. You can't disregard it, right? Because it's like it doesn't make sense to me. Like if your goal is to ever make like, I don't know, $1 million or $100 million from this game, you expect to make it from no hours? You expect to make it from paying some alert service out there? When do you humble up and realize like you got to put in the 10,000 hours? I think that's the only way. But tell me if I'm wrong. And there's some other guy or girl on the internet that's selling alerts and making you 100 million. I don't think that's the case, right? Like if you want the maybe fun 50K, 100K, and then sometimes lose it all, yeah, you can go pay alerts. They'll probably get you there. Maybe, I don't know. Um, but then if you really want to, make the best of it and front run all the alerts and find, the setups that make you money over and over, then I say start counting how many hours you put into this game already. Because I think that's where it's at. You have to put in the hours, and I've seen that across industries, right? It's not just doctors and everything, but other nearby industries to me, which is like venture capitalists. Dude, those guys, they keep networking for the next deal. It gets tiring, and I'm like, I gotta keep going too, because once you stop networking, your deal flow dries up. Um, so yeah, it's just the same thing with influencers, right? They have to keep posting, and if you understand how influencers operate, they have to keep getting in your face. They have to keep posting, keep posting, keep posting, get in your face until you decide to transact with them, right? So let me tell you the truth here. The truth here is that we need to keep watching this. We need to keep analyzing because the people who actually made $100 million from this are still, eyes glued to the screen to this day. Like no joke, right? Um, like so some of my idols, like they're still talking about it to this day, like Stanley Druckenmiller and stuff, right? So that's the reality that you kind of have to come to conclusion about. If not, then you're probably just going to be like a intellectual tourist or knowledge tourist, where you come here, you learn a little bit, and then you succeed or fail, then you leave, and then you go on a humble journey and explore other things, and then you realize, you come back to it, you have to put in the hours. So cut out all the middle stuff, all the processed food, and just go to the source and eat the nutritious information, right? The very nutritious information, and just learn from the source. Um, that's what I've been trying to do. Nisha says, "What's the best way to assess?" Oh, read that. Is there a way to calculate it? Because I just see most people just eyeballing it. Bukowski's calculated, right? There are ways to calculate it. It would be at that point, if you're calculating the pattern or the candlesticks, then you're approaching the practice called quantitative trading or quantitative analysis, where you're actually putting a rank into it. So, for example, right, the system that you see right here, this is a example of calculating it. And the way the calculation spews out the results are, colors, right? So in other words, like I'm calculating the fangs right here. Again, this is the $8,000 indicator that I'm stacking all together. And basically the signal is basically to go long now. So it is calculated, but because I have the code snippet, it's just automatically there. And now I just apply the human analysis on top, which is what I'm doing here, right? So this is what if you're talking about calculating, you're actually getting into quantitative analysis here, and you will develop the quantitative stuff to do that. What platform are you on showing? This is well, Charles Schwab, but it used to be TD Ameritrade Thinkorswim. So it's the Thinkorswim platform, right? It's free. It's free if you open a brokerage account with Charles Schwab. There you go. I'm advertising. Dora says fractal analysis. Fibonacci developed his mathematical model on fractal observations. Lucas number also Copac analysis. I'm just now reviewing. Yeah, there's also like uh, harmonic pattern analysis, which that's a little bit more advanced for me. I never actually got into that, right? Because like right now we're looking at candle patterns and candlestick patterns, but there's also trading harmonic patterns. Um, Now that's a lot more advanced, but we could pick it up. Trading patterns. This is the advanced level of like analysis, which this is. I'm pretty sure we could pick it up, but it looks pretty complex. I'll tell you that. Like I feel like I know enough to get by in the stock market, but if you really want to take your analysis to the next level and like start playing a lot more, again, it's the game is what you make of it, right? Like there's so many strategies in here that you could approach. This is just another one of them, which is also very interesting. I guess it applies well in the forex market because like that game has no volume, right? Forex has no volume. It's just because the information nodes in forex, they're all distributed, so no one has a complete picture of volume. So that's why it doesn't exist, which is interesting as well. I have a brokerage in Charles Schwab. Where is the graph you just pulled up? Well, it's in the Thinkorswim platform. You have to download and install. But this graph, this quantitative that you see right here on the screen, this actually costs like $8,000 altogether. So, so you won't be able to have this. This is sort of the value that I'm giving you guys, right? This indicator, collectively is like $8,000. That's why when I say 8K indicator, I really mean $8,000 indicator. So we're using that to understand what the grandmasters are thinking, right? So right off the bat, you won't have this. Right off the bat, you will basically have just a blank slate. So right off the bat, let me pull up another one right here. Right off the bat, it'll basically look like, give me one second. Remove all studies. Basically, it'll look like this right off the bat. Right off the bat, it'll look like that. So with modification, customization, it'll look like this. But right off the bat, it looks like that. Which is still, I mean, it's still good enough for the beginner. One time doors, one time. I only need the code once, right? In theory, I could give you guys a code too. That's actually not theoretical. That's actually factual, but yeah. Um, yeah. I have so that yeah, that's part of the the value that I bring over here as well, right? I'm using pretty sophisticated tools, but most folks won't understand the sophistication unless you close your eyes and kind of understand the abstraction. Let's look at some stocks, guys. We talked about SMCI. Let's look at like the other ones that are also looking interesting because Bitcoin's moving. So Coinbase might be a very interesting play next week. Because again, like I'm convinced that the stock market doesn't have many choices in terms of like crypto related assets, right? So this one's been cruising on the 200-day moving. Oh, why on my screen? A little bit of a, there you go. I had to reload. This one's been cruising on the 200-day moving average for quite some time. You guys see that right there? So it's showing me that maybe there's a buyer, a very interested buyer right there. And we recently broke out and closed very strong right here, right? So we went above this bar at 210 and we closed at 211.4. So it's just early, just a little bit of early signals to like say, maybe there's something here, right? Now, when this one runs, it could potentially really run. If we analyze, we also have basically a broadening wedge pattern right here, right? So we could also consult Bukowski and see what his analysis of this. But from the looks of it, right, these points will remain respected. I'm talking about this point. I'm talking about these points right here. I'm talking about this point right there. And I'm talking about this point right here. And again, you also mentioned there's a midline, right? So yes, there also is a midline right here that one could apply, I guess in theory, and you could say that it could be breaking over this midline right here. In which case, the next test point is somewhere up here at the 260 mark. All right, so again, these are ways to kind of think about it, but at the same time, you also know that there's been a nice support at the 200-day moving average. Now, in terms of the volume action, the majority of volume seems to be right here. So in other words, this stock is still trading within, it just got back into it actually, into the majority volume range above 200. So let's edit this. Let's make it a little bit more transparent because it's getting a little messy right there. But there we go. Press save. And there you go, back into this area right here. And the question is, where are the stops? Where do you get out? So 200-day moving average, obviously, right? Let's add another layer of annotation analysis on here, uh, right? The key thing in learning here is that understand that there's a lot of intellectual layers that are being applied here. So the 200-day moving average, the support right there, you can do that, prior breakout resistance 210, and maybe you could even do the gap right here. But basically, all the blue lines are areas to get out. I mean, depending on how you want to adjust it, right? Like let's say if you get in here, where are you getting out? Focus on where you're getting out, and focus on respecting where you're getting out. But the reason why you're getting in here is you anticipate like a 2-to-1 risk reward or something, or you expect it to go somewhere upwards of 240, right? That's the initial. If it hits your target, sell half. Try to sell half. Try to be greedy, or raise your stops as it goes up, right? Now, you hit your target, then you sell down to like 20% of position, and it continues to go. That's a little bit of a bonus, the cherry on top for you. So that's really how it should be. If you want to get really maniacal focus with this, I guess you could say, in terms of process, right? Um, when you get in, you expect it to go in your favor immediately, and you already know where you're going to get out, and you're going to respect where you get out. And we got to practice that over and over. And you're already after applying your layers of analysis here, which we applied several layers, and we already understand that Coinbase is one of the few out there that the markets or us folks, us average folks here, could really tap into and get exposure to crypto brokerage, crypto revenue brokerage exposure. Mm. I should have filled up on water. Okay, let's go on to the next stock. So that's coin right there. Right, we analyze one by one. RTX. Again, I haven't been following the geopolitical conflicts and stuff, but you guys tell me if anyone knows. Like it seems like conflict is coming up again, right? But here's essentially a bull flag right here, and you also have this nice amount of volume right here, which wow, it really respected right there. Right, this is actually really nice. So if we analyze this, right now let's do it just purely naked charts. Maybe I'll have to go back to the charts. What do we see, guys? Again, this is my style. I look here first, and I also look here, right? And I guess you could say there's one right here. But generally, I know that there's a big player waiting right there, and there's another player waiting right there. And this one is currently in development right here, right? So it's still setting up right there, right? That's a bull flag right there. And we want to see if it can make a new high. Uh, from a pairs trading perspective, we know that, RTX, the laggard is between RTX, Lockheed Martin, and Boeing. Boeing's a laggard one. But does it mean that you should play Boeing? Not necessarily. This one's probably better. And you're playing Boeing because you want to be cheap, which is fine too. It's okay to be cheap. But just know that being cheap, you're going to pay for being cheap. That's just how it is. Dora says, yes, the conflict is increasing on both fronts, Ukraine and Middle East. Yep, yep. And you see it in the stock behavior, right? So now look, this is another flavor of dimensional analysis, right? Now we're thinking about what's going on around the world, and we're gauging like the news of like the increasing conflicts in the Middle East with Ukraine and Russia. So can we lay that in our analysis and generate a trade and see what the markets are reflecting? Yes, we definitely see that. Now, at the same time, you also have this nice top resistance line that it's been respecting for quite a while already. And we want to be respectful of this top resistance line. And this is a more of an advanced technique that is actually done by one of the best in the industries, by the way. TRL, top resistance line. It's actually performed by one of the best players in the game, which I've had the honor to learn from, right? So yeah. Let me see. So right there, right? So I mean, you could do this 2 points make a trend line, right? This is probably better, more fitting. Uh, but there we go, right? So again, it can happen two ways, right? We could go back to the midpoint as well. That could be a theory, right? The theory is the midpoint right here. The midpoint could be support. But if we could go above this top resistance line, then it really elevates, right? So in other words, what could potentially happen is we trade above this top resistance line, we break out, right? And we go and we really run up, we start to elevate more. So that could be a really bullish scenario right there, right? That's something that could happen with RTX. And I left on AV. There are plays that I have been. Let's take a look at AV as well. This is RTX right here, guys. Right? This is what we're saying. And what is Bukowski's pattern here? Now, remember, we're also going into all-time highs. So as we're trading into all-time highs here, there's no prior, bag holders at all. Everyone in theory should be a winner. except for the except for the weak hands. Because essentially, if you sold, you're a loser, right? Because everyone now, and essentially, there's no more bag holders, so everyone is a winner in the stock right now. So in that case, it could go a lot higher, and we don't know how high. Um, that's just the way it is, right? That's just the price that you pay for not being cheap. Let's look at AVAV, the one that Doris is talking about. AVAV, AeroVironment. Let's see what's going on here. As soon as it loads up, there we go. So real quick, I noticed that this one is aerospace and defense. We go down. This one's a Russell 2000, so this will also be dependent on how the Russell 2000 behaves. It's a 5 billion market cap, and it does about 700 million. It is profitable as well. Shares outstanding, they've been diluting a little bit, right? So that could be headwind here, at least recent headwind. This stock was looking bullish over here, right? It was bullish there, but then the trend has recently changed, Doris, right? Where we had some sell-offs right here, and then it starts to go down. It's hanging at the 100-day moving average, which is also in line with this amount of volume that we see right here. So I want to mark that spot, right? Because again, I'm doing the homework here. This is the analysis. So I know that this is an area of potential accumulation because in my book, this thing could go either direction, right? Either direction because one is like, well, we had recent sell-off right here, so it could go down. But two is we're back above the 50-day moving average, which I'm pointing at my arrow right here. So it could still go either direction, just because of like the nature of where it's currently traded, in my opinion. Now, there is something that we have to take note here that is unique that you might have not seen, which is a rounding bottom, right? Rounding bottoms are actually, potentially bullish, and it's assisted with the amount of volume right here. So what that means next is I basically need to see this round, maybe some areas of support here. I need to see this one move up quick to meet my criteria. If it starts to move below this arrow point right here, then it doesn't meet my criteria anymore, and that's my stop loss. And then I'll just go play something else, right? I'll go revisit. Now, I also recognize that this prior resistance right here becomes prior support or becomes support as well. So it's holding a support line right there. So that is one area to stop out right there if it doesn't hold that area, if you want to play a tight stop. But from here, ideally, what I want to see is that it retraces, back above 100%. But that might not be the case, right? Because this could still go either way. So it's not something I want to play because it's in that either or. But now, if I want to overlay more analysis into it, right, whether it be corporate or macro geopolitical conflicts, then I also know there is geopolitical conflicts. So now I'll probably expand a little bit more. I'll open up the aerospace and defense, and I'll look into what's going on in the industry and where do they stand, and if it's peers, if the defense stuff are in rally mode, right? So let's take a look. So AVAV is probably lower. Yep, that's where AVAV is right there. But what I'm going to do is a industry peer analysis, right? So I see that GE wants to go higher, RTX is going higher, Lockheed Martin's going higher, Boeing is severely undervalued, relatively undervalued, but that does not mean opportunity, right? It just means that hey, it's beaten down, it's 80%, and if you want to be cheap right now, you will pay for it. Uh, General Dynamics right here is looks like it's consolidating at a high. NOC, right, another defense company, big one too, 74 billion, 75 billion, is moving higher. TDG, so it looks like the vast majority are trying to go higher. So HWM is another one that Doris mentioned. This one actually looks better, right, Doris, because it's actually about to explore new prices. HEI, HEIA, Textron, that's an interesting name. This one's trying to move up, right? So yeah, so it looks like majority of the industry here is trying to move higher, Doors. Let me see if I could give you another perspective here. If I go to groups, all right, show you some new techniques that one could always do, and we go to it would be aerospace, but why am I blanking out right here? Sector, but it gives me industry. Uh, what industry is? Oh my gosh, I'm blanking out. It is under industrials. That's right. That's right. That's right. So I'll go to industrials. And let's see if I can order any further. Wait, there was something I was going to do. Was it sector? If I click sector, oh, no, yeah, it'll just show me industrials. But if I open it up, I was trying to go a little bit more granular than this, but it's okay. We'll just go industrials, which is basically that. But then we go into, okay, this is what I'm doing. So now I know it's a little bit more specific, but maybe I'll look at the 1 month And I'm looking at aerospace and defense, and I see that yes, it's up 4%. Aerospace and defense right there. It's up 4% for the month. Oh, cool. It gives me the whole consolidation. So I could see that the industry, the sub industry here, it is trending. In the last week, aerospace and defense, we might as well go aerospace. We can see it all. In the last week, it did not perform. This week, it did not perform. How about in the last half year, 18%? So in the last 1 year, it did perform. So in the last 6 months, it has been performing, right? So this one leans more towards positive. So now I have a feel and know that the industry is performing. So yeah, that's how we structure a trade right there, I feel, right? Which is like I know where my points of risk and support are, where I'm going to get out if it fails from here. If I am, if I lack patience and I have to get in right here. If it fails, then the next area where it's likely to test is this highlighted area right here, which might be a place where you could accumulate. But if you buy cheap, you're going to pay for it because we don't know how long it'll take to make a reversal. Versus if you buy high, it's basically going to break out, and there's a chance that you'll be in the green right away. So you pick your experience on this. Like what would you like to experience? Both are viable strategies, but it comes down to what you think works for you the best. Uh, okay, so that's AV. HWM looks a lot better, so let's pull that one up. Let's do analysis on that. Oh, I put AW. It's HWM, not A. My bad. HWM. HWM. We go in here and we look at it. Give me 1 second. Howmet Aerospace Inc. So again, we could analyze the price. We could analyze the fundamentals right here. These are the snapshot of the metrics. We can see that shares outstanding is declining, so that's kind of good. It's not severely declining, but that's good because there's less shares. And we can see that sales are really good, 6 billion, and it's profitable. Profitable. It has an EPS. We can see that not that much debt right here. I mean, it's a little red, but that's okay. About this much in human capital, 23,000 people. It's a lot of people. And again, I did say it's profitable, so 900 million in income and 36 billion, 39 billion market cap. Essentially, is a blue chip, right? Sales growth wise, it's grow quarter over quarter is growing about 14%. So it is double digit growth. Now, the stock is definitely reflecting the setup that Bernard likes, which is the far up to the right. So Bernard probably likes this one. I'm guessing. Pretty sure I'm forecasting. And we could draw some trend lines as well. We got that top resistance line that's drawn by the computer, but maybe we could draw another one. So let's draw one. Two. It says, remember, the rule is 2 points make a trend line. So officially, this right here is a trend line, which is an area that it may respect later if it comes back down, if it falls from the heaven, let's say. Um, Bernard says definitely. So yeah, I mean, this one's looking good, and it fits my criteria of like going to all-time highs. Because again, if you go into all-time highs, let me double check, you are clearing historical prices, right? Now, at the same time, as we zoom out, we have a very parabolic curve. In other words, this is another scenario situations that you'll learn as you trade these larger movements right here, right? The hard part about this is that it gets really extended, and you have to really like you don't know what your point of stop out is. It gets very difficult to hold at these levels. Could even be hard to get in at these levels for a lot of people. But the question is like, if we had to play it, how do we play it? Right? This is a parabolic, move right here, which basically means that once it fails this curve right here, it's gonna be like an SMCI. It's gonna go sideways for like 6 months. So you also have to be aware that you're buying into highs here on the monthly, and it would be wise to really respect your stops. So if we zoom back into the daily right here and we look at points of like where I really need to respect the stops, this is one area of support here. If it were to fall, the other area of support based off the volume is this level right here, right? So those are two levels that we need to consider. And then we see that it's attempting to go to a new high, right? So that suggests that price is probably going to go higher. There is a gap right here, right? It didn't fill the gap fully, but they say, in trading, gaps tend to fill. So that's something to consider. So it could definitely revisit. Um, but yeah, I mean, this is going to be, I mean, this is a play right here, but it's not going to be easy because we need to just be aware that, on the back end, on the later time frame, the monthly chart, it's pretty extended, right? And just get ready to sell if you have to, but it definitely looks like a long. Could you show their earnings growth? Yeah, their earnings growth is 14. Well, that was sales growth. Their EPS growth is 40%. So earnings growth is 40%. Their sales growth was 14%. So they're becoming a lot more efficient with their capital, right? Their EPS quarter over quarter earnings growth right there versus their sales growth. EPS this year 30. So yeah, I mean this is a very efficient entity and it's profitable and the shares outstanding are declining. And that's why, and it's also in aerospace and defense, in which case we have negative global news. So I don't see why, and it's going to all-time highs. This thing has like the perfect story right now. I think the last thing to do is like let's actually go look at the business and the leadership and see who owns it, right? Could you show their earnings growth? Oh, Bernard says like. Right? He definitely likes this one. Yeah, it meets the criteria, but we have to have a risk management area, right? If not, then you're not going to have a good time because if it goes the other way. But I doubt it because there's just so much great stories to this, from profitability to technical setup to in several layers to identified support, identified risk, identified setup to the long side as well, and the macro layer, which is like the geopolitical conflict and what they supply. Let's understand a little bit more of the business and why it's critical, and if the conflicts in the world are arising, right? So we go into their website, we can look at their product lines, and we can see that there's aerospace, and then defense and space, and then commercial transportation. If we want to dive a little bit deeper, we could go into the investors right here. And on their page, we're going in here and we're looking at, just looking around. Usually I like to look at a deck, as you guys know me. And we could open up one of these decks right here, like an annual report or a recent one. I actually do want to look at it, so let me pull this off to the side and download it real quick. Give me 1 second. I pull it off to the side because, for security reasons. Here we go. So this is a report right here. Let's take a look. Let's take a look. Like let's learn a little bit more about this company because it's doing a fantastic job. The vast majority of its sales is commercial aerospace, it looks like, revenue by market, and this is as of 2024 Q2. The other components is industrial and others, commercial transportation, and then defense and aerospace. Okay, cool. Let's keep going. We know revenue's up, and we know EPS is up as well, right? Adjusted EPS is up 52% year over year. So it's getting even more profitable. In other words, it's taking home more income, right? We didn't look at the balance sheet, but it looks like the balance sheet, they have about 752 million in cash. So they're not only are they great, they also have almost $1 billion in liquid cash. They do have a little bit of debt, if we recall. All right, we could read a little bit further, but there's also been now look more added tailwind right here: repurchase of 60 million in common stock. So they're also buying back their own shares, right? Something to think about. More added tailwinds. All right, if we go back to the chart right here, they're buying back their shares. You saw how I saw it immediately right here. I saw that the shares outstanding is declining right there. So we know that, yeah, like they're taking shares out of the marketplace. That's going to be bullish. There's just so many reasons for this to be bullish right now. That's why the stock's reacting, right? And then the point of entry, right, it's showing us that, yes, it's setting up a bull flag and everything. What else? It talks deep into the systems, but let's move forward here because I want to look at a bigger picture. In summary, revenue's up 14%, profitability is up over 52% right here per share, and their guidance right here, they expect revenue to be up in fiscal year 2024, 12% year over year. They also expect free cash flow. They also They also are repurchasing. Wow, this is why we're here. They're repurchasing $2 billion, increase from 2 billion to 2.5. So they're even more bullish on themselves. John says, how do you know where to find these quarterly earnings report? So John, as a public company, they always have to they because they're a public company, they need to give the public, which is us, the right information. So you will always find it on their website under the investor relations page. Right. So now this is even better. You also know that not only is the company's doing great income profitability, but they are also buying back 2.5 billion worth of shares. Right. This is how we're lining up to think more like an institution, and then we identify spots where they're accumulating a position. So can we go back and see that it's making a trend? 100%, because only big players in my book could create a trend, right? Unless Doris has a lot of Doris as an individual, unless Doris has a lot of money, Doris says, oh, I'm gonna buy a $1 billion chunk here or $100 million chunk here. Oh, hey, here's another opportunity, and Doris is like, I'm gonna buy another $100 million chunk right here. At that point, Doris is not a small individual. Doris is an institution that is the size of an individual, right? She's just deployed like $300 million into the stock. So that's why Doris would have so much interest to come back to this game because she is not a small fish. She's actually a whale in that case, right? Um, but yeah, hopefully that answers your question, John, where in terms of like finding the quarterly reports and getting a little feel of the stock, right? Again, if we run this routine over and over, guys, you get pretty used to it and you'll be a pro in no time. Like a pro, analyst in no time. Uh, love the flattery, Doris says. Carrie or Bernard says, danger, don't say a woman is a whale. Could be trouble. Hey, well, that's true too. But in this investment club, it is a compliment if we say you're a whale. That means you have a lot of money. 2024 assumptions. There are assumptions in here, right? They're overhead costs, depreciation, amortization. This is more accounting stuff, right? How they calculate all the assets and shares and stuff like that. But let's continue because that gets pretty granular. Reconciliation of net income, right? We see how much they take home, but we already saw it in the stats. Again, you see how like all these numbers, I'm getting more of a granular look. But if we go back to the FinViz platform, which I pay for, right? They already did a good job for me just to get enough of a feel of what this company fundamentally looks like. So you practice this long enough, then you kind of fundamentally know like, oh, this is actually pretty solid. Like I don't feel any fear about this one. Even if it does go down, my question is, where would it go down to? Well, we already mapped out the areas of high activity. So even if this sells down, we already know that $80 a test area, $65 a test area. If it fails those areas, then something fundamentally is wrong with the company. Like they're losing money, revenue's going down, they're losing money, something really negative, maybe, I mean, knock on wood, headquarters blew up or something, I don't know, right? What else? Investors, lose faith, they just start selling off, right? But by that point, we would know. And right now, the trend is up, and it's not saying anything bad about it. So yes, that's many reasons to belong this one. Again, this is not investment advice, okay? We're in this learning journey together, and it's about putting in the hours because, after some point, you gotta put in the hours. What else could we stack on top of this to help us develop a confident view that this is something that is worth playing or could help us? And again, you could apply this to all the different stocks out there, so don't feel like this is the only one. And I think I lost my tab here. Let me see. I lost the report. Where is it? Oh, right here. Q2. Too many things going on. But let's see what else. Uh, the only thing that we didn't look at, right? Now that we understand their business, 50% of their business is aerospace commercial or commercial aerospace. That's 52% of their business, right? In terms of what they supply. In that case, we could go back to the website, which is right here, and we go back up, right? So again, John, your question earlier, this is where you find it under investors right here. We go back to the website and we want to look at the products and we look at commercial, well, it's aerospace. So we click on aerospace and essentially this is their products right here, right? So it looks like they sell a lot of like engine components and stuff like that. Uh, let's look at some of their systems. And this is a little bit extracurricular now, right? So now you see like, oh, okay, they sell all these like, nuts and bolts and stuff. Cool. Now you have a really good feel. The last thing that we didn't look at on this one is the insiders and the external holders. So let's take a look. Let's open up this one, aerospace, and see who's been buying the stock. I got to run. Thanks again, Kay. Enjoy your trip next weekend. Hey, you're welcome, John. Have a good one. All right, so we look at this. We go in here, and I want to see the institution first and see if anyone has high conviction. Ooh, this company right here, Kensico Capital, has 13% high conviction. It's telling me, do they know something that we don't know, right? Do you see right there? I see immediately, like, boom, 13%. Um, and they're willing to own 1% and risk 13% of their reputation. That's that's wild. I just realized how wild that is to risk your reputation. Imagine like you're in Vegas, right? And you're placing bets, and you're like, you know what? I'm gonna raise you. I'm gonna risk 13% of my reputation on this bet. I mean, that's kind of cool, but yeah. So 13%. Let's look at the leadership right here. We see that John C. Plant, he has quite a bit of shares as well. So 2.1 million shares. That puts him at what? 2.1 million share puts him at he's okay, less than 1% shareholder, but still significant, right? I mean, that should be a lot for every individual. So he's got skin in the game relative to his other leadership, and he's got to motivate the other, the other part of the pie over here. Um, so we're gonna look at Kensico because I'm curious now. Wait, no, why did it log me out? That's weird. Let me log back in. Log in. I got logged out. So give me 1 second. There we go. Oh wait, there we go. Log in. Dora says, I'm investing time in the future of AI-driven wars by drone. Ukraine and Israel are phenomenal at this, she says, but both have taken existing technology and revisited it to fit their needs. Incredible minds, USA companies are revisiting their technology to meet these innovations. I know, either for the good or the worse, right? I don't know. So, okay, Kensico Capital, right? They're willing to risk 13% of their reputation. Let's see their performance. Let's go down. And we see that their performance, all time from 2013, 3 billion, so sideways, right? Man, imagine, well, I mean, fund managers still make money regardless, but imagine like, and again, it could be performance or it could be distributions from investors pulling out. You just don't know, right? But 3 billion, so that's their sweet spot, and this is one of their biggest position. Let's look at their entire portfolio. So we know that historically we didn't really see performance here. So maybe something to take note, right? But current portfolio, let's just better understand and see if they are buying anything else that is of similar quality, right? So that is their biggest bet actually. Following that, they're willing to do 11% bet on FICO right here, or Fair Isaac Corp, and then Microsoft. So interesting expression on this investor, I would say, right? But yeah, nothing too much. Anyways, guys, it's 12 o'clock. I know that this session went by pretty quick. Maybe. I don't know. But lots and lots of information shared today. Have a great next 2 weeks. So, yes, so guys, I'm going to be taking off for vacation here. So, we won't be meeting next week, but the week after that, we will be meeting and continue the educational journey as usual. I'll still have my eyes glued to the screen. I'll just be, on Telegram, right? As for the school.com platform update, I am cutting that as a loss just because it costs $100 a month and they're not really helping the community grow. So that we're going back to Telegram. Just a little update there, FYI. Excellent session. Have a fun vacation. Thanks, everyone. Thank you, Bernard. Thank you, V, and everyone. Thank you, Doris, as well. Thank you for your efforts. You're welcome. We gotta elevate, right? We gotta take it to the next level this year. So looking forward to many more sessions with you guys. At least, like, I mean, where else would I go? Like, this is the best game in the world right here. Thank you, Ivan. All right, guys. Gonna power off now. So start clicking buttons. Have a good night.